What I'm about to show you could change everything for Caspa holders. We're sitting at the most critical moment in KS price action since that massive July rally, and the next 48 hours will determine whether we're looking at a brutal 20% crash or an explosive breakout that could send KS flying toward 10 cents. The charts are screaming at us right now, the indicators are flashing warning signals, and there's a battle happening at a price level that could make or break your portfolio. Stick with me because by the end of this video, you'll know exactly what's coming next for Caspa and how to position yourself before the masses catch on. Let's cut straight to the chase. Caspa is trading at $0.0864 as I record this. And if you've been holding KAS, you know it's been a roller coaster ride from hell. We saw that beautiful rally in July that took us above 14 cents, absolute euphoria. But then reality hit like a freight train. The sellers came in hard, volume started drying up, and now we're stuck in this sideways nightmare that's been bleeding traders dry for weeks. But here's the thing that most people are missing. This isn't just random price action. This is a textbook consolidation pattern, and these patterns always resolve with explosive moves in one direction or the other. Right now, KS is down 5.8% in the last 24 hours, volume is fading, and we're sitting right on top of what I call the make-or-break zone. This is where millionaires are made, and portfolios get destroyed, and most traders have no clue what's about to unfold. The cryptocurrency market is brutal, especially for altcoins like Caspa that can swing 20 to 30% in a single day. Bitcoin dominance is hovering around key levels, institutional money is still flowing into digital assets, and the Federal Reserve's next moves could send shockwaves through the entire blockchain ecosystem. Now let me show you exactly what the charts are telling us, because this is where things get absolutely fascinating. Yesterday I told my subscribers that $0.082 was the level to watch, and guess what happened? We called it perfectly. KAS bounced right off that ascending trendline support that's been holding since the June lows, just like we predicted. But here's where it gets interesting. We're still trapped in this yellow consolidation box between $0.082 and 9 cents, and neither the bulls nor the bears can gain decisive control. Look at these candlesticks in the circled area on my chart. They're small, indecisive, and screaming uncertainty. The buyers are trying to step in, but every time they push higher, the sellers smack them back down. This is classic distribution territory, and it usually means a big move is coming. But here's what's really got my attention. The technical indicators are painting a mixed picture that's absolutely critical to understand. The MACD is sitting right at 0, dead flat, which historically has been a precursor to significant price movements in cryptocurrency markets. When MACD flatlines like this after a major sell-off, it's like a coiled spring ready to explode. The ADX is reading 31.10, which confirms the downtrend is still technically active. This is crucial because it means the path of least resistance is still to the downside, despite what the bulls are hoping for. The CCI is at minus 90.47, bearish territory, but approaching oversold conditions. This is where contrarian traders start getting interested, looking for potential reversal setups. RSI is sitting at 44.99, not oversold, but definitely leaning bearish. This suggests we could see more downside before any meaningful recovery begins. The ultimate oscillator at 41.76 is telling us sellers still have control of the narrative. This indicator doesn't lie. When it's below 50, the bears are in charge. And the bear power indicator at minus 0.0058 confirms what we already suspected. Bearish dominance is still the name of the game. But here's the plot twist that changes everything: volume analysis. The selling volume has been decreasing with each leg down, which could indicate seller exhaustion. When sellers get tired, that's often when the most explosive rallies begin. The blockchain fundamentals for Caspa remain incredibly strong. The proof-of-work consensus mechanism, the DAG architecture, and the growing developer activity suggest this isn't just another pump-and-dump altcoin. Real institutional money is starting to pay attention to KAS, and when institutions move, retail follows with massive FOMO buying. Alright, here's where I'm going to break down exactly what's going to happen next, and more importantly, how you can position yourself to profit regardless of which scenario plays out. If KAS can break and hold above 9 cents, $0.092 with convincing volume, we're looking at a textbook breakout setup that could send prices exploding towards $0.095, then 10 cents, and potentially even 11 cents if momentum really kicks in. This isn't just hopium, this is based on Fibonacci retracement levels, volume profile analysis, and historical resistance turn support patterns that have played out countless times in cryptocurrency markets. The key catalyst here would be Bitcoin breaking through its own resistance levels, which would likely trigger an altcoin rally that benefits quality projects like Caspa. With institutional adoption accelerating and more exchanges adding KAS trading pairs, the infrastructure is in place for a sustained rally. If this scenario plays out, early buyers could see 15 to 25% gains in the next 2 weeks, with potential for much larger returns if the broader crypto market enters a risk-on phase. This is probably the most likely scenario in the short term. As long as KAS holds above that critical $0.082 support level, we'll likely see continued choppy price action between $0.082 and 9 cents. This sideways movement could last another 2 weeks while the market digests recent gains and waits for the next catalyst. During this phase, day traders can potentially profit from the range, but longer-term investors might find it frustrating. The key thing to watch during sideways action is volume. If volume continues to decline during this consolidation, it often precedes a significant directional move. Smart money uses these quiet periods to accumulate positions before the next major leg up or down. This is the scenario that keeps me up at night, and every KAS holder needs to understand this risk. If we close below $0.082 with volume, the technical damage could be severe. The next major support level sits around $0.077, but if that breaks, we could see a rapid decline to 7 cents or even lower. This would represent a 20% plus decline from current levels and could trigger massive stop-loss selling from leveraged positions. The catalyst for this scenario would likely be broader market weakness, potentially driven by macroeconomic factors like Federal Reserve policy changes, regulatory crackdowns on cryptocurrency exchanges, or a general risk-off sentiment in global markets. However, even in this bearish scenario, KAS could represent a compelling buying opportunity for long-term investors who believe in the technology and the team behind Caspa. Here's what I'm personally watching. The $0.082 level is absolutely critical. If we can hold above it for the next 72 hours with any sign of volume increase, I'm looking for long opportunities targeting the $0.095, 10 cents range. But if we break below $0.082 decisively, I'm stepping aside and waiting for a retest of lower support levels around $0.077, $0.075 before considering new positions. Risk management is everything in cryptocurrency trading. Never risk more than you can afford to lose, always use stop losses, and remember that altcoins can move 20 to 30% in either direction without warning. The cryptocurrency market operates 24/7, unlike traditional stock markets, which means volatility can explode at any moment. Asian trading sessions, European market opens, and US market hours can all bring sudden price movements that catch traders off guard. Look, Caspa is at an absolute inflection point right now. The next 48 hours will likely determine the direction for the next several weeks, and positioning yourself correctly could mean the difference between significant profits and painful losses. The cryptocurrency market is evolving rapidly. Institutional adoption is accelerating, regulatory clarity is improving in many jurisdictions, and blockchain technology continues to solve real-world problems. Projects like Caspa that focus on scalability and security are positioning themselves for the next major bull market cycle. But remember, timing is everything in crypto. The difference between buying at $0.085 and $0.077 might seem small, but in percentage terms, that's nearly 10% better entry point that could dramatically improve your risk-reward ratio. I'll be monitoring these levels closely and updating my community as soon as we get decisive price action in either direction. The next few days could be absolutely crucial for anyone holding KAS or considering a position. Whatever happens, remember that cryptocurrency investing requires patience, discipline, and a strong stomach for volatility. The most successful crypto investors are those who can remain calm during periods of uncertainty and make rational decisions based on technical analysis rather than emotional reactions to price movements. Don't forget to smash that like button if this analysis helped you understand what's happening with Caspa, subscribe for daily crypto market updates, and ring that notification bell so you don't miss any breaking news that could affect your portfolio. Crypto disclaimer. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly speculative and volatile. Past performance does not guarantee future results. Always conduct your own research and consult with qualified financial professionals before making investment decisions. Never invest more than you can afford to lose. The cryptocurrency market operates 24/7 and can experience extreme price movements without warning. All price predictions and analysis are opinions based on technical analysis and market research, not guarantees of future performance.